Hello, this is Bill Scheid from the Systems Lab, and in this video we are applying one of Dr. Ken Long's simple but very powerful ideas, and that is the idea of multi-time frame analysis. Ken often coaches people that if you typically trade, for example, a 5-minute chart, you might look at 1-hour bars to analyze the broader trend, or perhaps if you're trading on the 15, you would look at the daily. In this video, we're using that same idea to take a look at NVDA on the 10-minute charts paired with 2-hour bars for the higher time frame context. I think this is pretty interesting. Of course, NVIDIA has been getting a lot of news with the AI boom, and it's up more than 100% from its April lows. So what we have here on the screen is a backtest of the PRX system on NVIDIA for the year 2025. We have 10-minute bars loaded up, and we are not looking at a higher time frame. So this is only looking at 10-minute bars. In a minute, we're going to compare this when we do look at a higher time frame. Let's start here and take a look at some of the numbers. So we've got risk set to 1,000 per trade. So that means we've made 50.7 R this year on a drawdown of 25.8 R. 312 trades, we have a 33% profitability rate. That's about what we would expect since PRX is a trend following system, and a profit factor of 1.364. It's not bad for me personally. To spend half the year in a drawdown might be a little bit challenging. I would also like to see this drawdown number be a little bit smaller, especially since the total P&L is 50 R. I'd like to see a maximum drawdown, personally, for me as a trader, of less than 25 R. Now, let's add our higher time frame analysis. So I'm using the version of the PRX strategy on TradingView that also allows us to trade automated. And one of the features here is we have this filter called external market filter, which basically allows us to look at any other symbol. In this case, we're going to look at NVIDIA on a variety of different time frames. And basically what it does is it says we're only going to take entries on our execution time frame, which is 10 minutes, when our external market filter time frame is flipped to the long side on the PSAR. So it's basically an entry filter that looks at a higher time frame. If that higher time frame is in an uptrend based on the PSAR flip, then we will be willing to take trades on our execution time frame. So let's just check this box and turn that filter on. And let's notice what happens. So we went from 50 R now to 69.7 R, and we've essentially cut our maximum drawdown in half. We've gone from 25 R to 12.7 R, which is absolutely outstanding. We can see here that our drawdown is actually much shorter in length of time as well as in depth. So when we first looked at the numbers, you may remember that that drawdown went for about half the year. And now, yes, we do get into a much more shallow drawdown, and it only lasts for the first little part of the year. And then we have a fairly nice looking equity curve going through the rest of the year. So my takeaway from this is that Dr. Ken Long's idea of multi-time frame analysis is actually an excellent idea. And here we have some very solid looking numbers as evidence of the gold in that mine, as Ken would like to say. This is Bill Scheid from the Systems Lab. Thank you very much for watching, and happy trading.